15, 2021. We're going to discuss everything you need to know about SPACs in under an hour. As you could see, SPACs have gone so huge, not just in 2021, but especially since 2022. You've got all these billionaire celebrities all doing SPACs. Yes, you have Bill Gates backing. Yes, you've got Peter Thiel, Masayoshi's son, Bill Ackman, Baron Davis, Shaquille O'Neal, even Michael Phelps and Demi Lovato. You've got Jay-Z, you've got Bill Ackman, you've got the Foleys, you've got Richard Branson, you've got Harry Sloan, Reid Hoffman, Howard Marks, Anne Wojcicki, you've got Chamath Palihapitiya, Li Ka-shing's son. So, everyone, even Kevin Systrom of Instagram, it looks like everyone has a SPAC, isn't it? So what is a SPAC? SPACs are special purpose acquisition companies. You each have to have an experienced management team. You have to get some capital from SPAC IPO. It has a publicly traded entity, and you've got an operating business. You marry all those things, you've got a SPAC. So people believe that SPACs are a better path than IPOs, and so let's watch. Here's how SPACs work and why they are so popular. From Bloomberg, it's 2.5 minutes, so let's watch this for each other.
In a SPAC, investors seek to raise hundreds of millions of dollars, simply with a promise to use it in 24 months or so to pursue a takeover. Investors in the SPACs trust the dealmakers to make an acquisition that will make them money in the longer term. Finance titans like Bill Ackman, activist investor Cliff Robbins, and former Blackstone investor Chin Chu have all recently raised money for SPACs. Wall Street firms Goldman, Apollo, and Centerview have ones too. Total SPAC issuance soared past $25 billion through mid-August, already the most ever raised in a single year. Technology billionaire and Sacramento Kings owner Vivek Ranadive said a SPAC helps him capture the greatest wealth creation opportunity in history. That's miles away from where they were a couple decades ago, when the perception of SPACs was dim at best.
They were kind of sleazy, and people didn't know the companies, people didn't know the investors. Then in the early 2000s, Citibank became the first mainstream bank to work with SPACs, and the IPO market had shut. It was the only alternative. And now we're into SPAC 3.0, where it's actually a better path than an IPO.
Privately held firms are choosing SPACs because they present fewer regulatory hurdles than IPOs. They can get access to public markets faster and without jumping through the same hoops as an initial public offering. Investment banks like SPACs because they're bringing in substantial fees. In a year when market uncertainties depressed expectations for IPOs, SPACs have already generated more than $800 million in fees for Credit Suisse, Goldman, Citigroup, and others. Yet SPACs aren't without risk. Many pursue deals that fail to yield returns. SPACs since 2010 have returned 10% on average through mid-August. In that time, the S&P rallied more than 200%. But Wall Street is betting that SPACs will fulfill their promise, and that today's SPACs will match big money to the right deals. Bill Ackman, who launched the largest ever SPAC in July, summed up the opportunity and the challenge.
Basically, we're in a unicorn mating dance, and we want to marry a very attractive unicorn on the other side that meets our characteristics. And we've designed ourselves to be a really attractive partner.
All right, so in summary, guys, for the Filipinos and non-Filipinos watching, what is a SPAC? You essentially get a sponsor, so it's like a unicorn dance. You're in a soiree with a lot of companies, and you choose somebody to marry. In this case, you're gonna SPAC with them. So you have the money, you have the experience, you have the management team, and it's not just your money that's in the line. You're also gonna be a private investor in a public equity. So you'll hear PIPE investments very often, PIPE. Now, why do you think there is such an allure with SPACs? It's because most of the IPOs these days, the ones that every retail investor wants, is opening up 100% above the targeted range of the IPO price, skinning what people believe is a retail investor. So a firm rocketed more than 90% after the IPO, showing that it could have been better off having listed directly rather than going into an IPO, given the money that was still supposed to be for a firm rather than for Wall Street. Airbnb, if you recall, skyrocketed 112% above the market debut, in fact, even getting as high as $100 billion valuation. You saw Snowflake 100% up, and then the upcoming Roblox might actually follow suit with another 100% up. But who is the real winner there? Is it the retail investor or is it the privileged clients of Wall Street? For the retail investor, it has been just the privileged clients of Wall Street getting that money. And so with so much money on the line, individual investors believe that their money shouldn't sit on cash, but neither do they want to accept a frothy valuation. And hence, the money has gone to, with so little interest rates like these, Interactive Brokers will allow you to borrow 1.59% a year for $100,000, and those with $10 million up could borrow 0.78% with Interactive Brokers. You could see that the interest rates are so low versus Fidelity, Schwab, E-Trade, Ameritrade. I'm not an affiliate of Interactive Brokers. However, I use Interactive Brokers for my own brokerage activities. And based on that, I also checked Etoro spreads and fees on stocks. Their spreads are somewhere in the line of 6.4 plus about 2% or something in the realm of 8.4%, still higher versus IBKR. So the plan that works best for me is IBKR Pro. And most of the individuals, given the lack of alternatives, IPOs are expensive, very frothy. You're supposed to pay 200% higher, 150% higher. The money of the retail investors generally went into SPAC IPOs. They actually rose as much as $200 billion for 2020. That was a quadruple from 2019. And if you compare that for about 7-8 years ago, when there was only $7 billion raised, right now, SPACs are actually, as one of the billionaires were saying, it is at the golden age of venture capital investing. You have billionaires looking for SPACs, and they're willing to be the sponsor and the face. And so if you want to form a SPAC, you launch and you file to go public, you find roadshows, you find investors, you all buy at $10 each, you go public, and then the SPAC, the sponsor would keep 20% of the shares. You search for a target company to acquire, you decide on which company, everybody votes for it, and then that company changes ticker name from the blank check company to what it is going to be acquiring off. So the downside to SPACs, of course, is there will be expenses. It could be about 2%, 5%. Usually it's about sponsors getting paid either equity or a certain fee. So you heard about a while ago, some investment bankers love SPACs because they generate a lot of fees, something in the realm of $200 million if it was a $10 to $20 billion SPAC. So of course, investors have to bet on the sponsor because sometimes you don't know what company they'll buy. So you could actually just invest in Peter Thiel, but at the end of the day, what company did Peter Thiel buy that I gave a $5 to $10 billion valuation off? Of course, SPACs have been very much good because there is a time constraint as well. Usually, sponsors have to find a target within 2 years, but the beautiful thing is that most sponsors actually can clock in with that target within about 6 months or less. Now, the target company quality is really where the biggest factor of owning a SPAC for. What target company are you buying? Now, most people say that there is a high risk for retail investors, but we disagree. Usually, if you look for the highest quality backed sponsors, they actually have roadshows for investors, and it's actually very easy to understand which SPAC that belongs for your Awesome10X portfolios. And so the treasure hunt begins. So this is really the accurate picture of what SPAC and treasure hunting amongst the hundreds of SPACs that are there in the offing. So SPAC mania, that has been what Wall Street Journal has been saying. They were saying that they gave early investors steady returns with little risk. Hedge funds are scoring gains when blank check companies rise after announcing the deal to take that startup public. It is actually a bypass of the traditional IPO process. So in general, if you take a look since December 2020, you are seeing at least an average performance, something in the realm of 25 to as much as 75%, sometimes even 225%, around 60 days or about 2 months after a company files their SPAC offering. Meaning if you're very early, you're able to get that 25 to 75% return in about 2 months or sometimes in 3 months or less. So isn't that great money to be made for investors like you and me? And so how does a SPAC work? You've got cash held in trust. This is a blind pool of cash raised by a sponsor through an IPO to acquire a private operating company. The acquisition has to happen within 2 years or less. You've got a target company and then you SPAC it up. You just combine the blank check company and indeed within 6 months, sometimes 2 years or less, publicly listed operating company. This will then generate value through a highly incentivized management structure. So in a way, you are doing a roadshow and you're going to have to check the quality of the sponsor before you actually engage with the SPAC. And Forbes actually narrated how SPACs became Wall Street's money tree. In a world in 2020, when people didn't want to do an IPO, SPACs were actually the best place to actually get a lot of money in a short amount of time. And you can actually hold a lot of them for a decade if you truly believe in what the sponsors and the target operating company believes in and wants to do in the next decade or so. And of course, you've got Biden winning, proposing $1.9 trillion vaccination in an economic rescue and legislative package. This just happened hours ago. That was January 15, 2021, which actually made all the market cheer and still be happy because they know that the Biden presidency and the Kamala Harris presidency are both the Biden-Harris president, vice president, are both going to make sure that America can do a lot of things in a very short amount of time to rescue, especially after the COVID pandemic and even during this COVID-19 pandemic. And so you know that Biden-Harris has a huge plan on the ESG. So in 2020, you'll see that 2019 to 2020 saw ESG fund inflows go heavily in the $5 billion zone, hitting up all of our electric vehicles, solar power, wind power. ESG is described as environmental, social, and governance. In 2020, this has gone high, and I believe in 2021, these remain to be the best pool for the smart money, where all the retail investors and even the biggest mutual funds and hedge funds and pension funds have largely put their money. And we discussed this in 2021, that when you ask us about the secular trends of the decade for 2020, 2021, until the next 5 to 10 years, we believe that it's the carbon neutral world that you have to be betting into. And any company that promises to clean this world, to clean our planet Earth, is one of the biggest funds that you have that we believe that you should actually put your money into. So do watch our January last week Free Friday class about how an Awesome10X beginner can actually invest for their 2021. Now, of course, please do watch even our older videos in 2020. Yes, some of our coverage have got 100 to 200%, which would actually just encourage you that we are right on the money and that the only question is, why are you just starting now? However, that's not a problem. At least you are starting now rather than tomorrow or the next year. Now, all SPAC, everything, who should be scared of the clean tech IPO craze? Some people are saying that this clean tech IPO craze could be well on a bubble. 2020 IPO proceeds raised have been mostly in the SPAC zone, 44% SPACs, larger than your industrials, information, healthcare, financials, consumer. In terms of SPACs, we are getting a lot of industries, yes, but it has been the ESG, or rather the clean tech SPACs, that really got a lot of movement and a lot of money flow. What we're talking about here is that we're talking about SPACs that could be the next Tesla. And just recently, January 14, in fact, CCIV, also known as Churchill Capital, started off the week with a lot of great news that Lucid Motors could be the one inside CCIV. And for many investors, Lucid Motors could be a challenger for the next Tesla. Now, everybody knows that Tesla has risen something in the realm of 8x just last year. More importantly, if you've invested at least during the IPO in 2010, your about $17 is roughly $5,000. Let me say that again. Your $17,000 is $5 million in 10 years, in a decade. Therefore, the average Joe who believes in a company, somebody like a Tesla in the making, are really adamant on finding all these SPACs to be either the next Tesla or just an accompaniment for this Tesla electric revolution. Indeed, you've got Lucid Motors hitting as much as, I think, something in the realm of 50% after announcement. Lucid looking to go public through a SPAC. Hamilton Chukio Brokerage comments on Lucid talks. Lucid Motors reportedly in talks with CCIV for a likelihood of a $15 billion deal. Guys, Lucid Motors at $15 billion valuation will compare with other electric vehicle startups that are in the $5 billion. Some of them are actually $50 to $60 billion. Those like the NIOs and the XPeng Motors, which are the Chinese Tesla, supposedly Chinese Tesla killers, right? So, or competition. But the point is, there is a lot of craze in these next Tesla SPACs, IPOs, and so forth. And you could see that all of these companies in the electric vehicle, solar, hydrogen fuel cell sectors have gone 5x, 10x, 2020, and continuing to do so this year. Whether you've invested in Tesla, 1211, Fisker, Ride, aka Lordstown Motors, Hillian, XL Fleet, Goev, Workhorse, Solo, FUV, aka RC Moto, Green Power Motors. Let's say you got into Arrival, Light Electric, aka NGA, GIK, Lightning Motors. So what you're seeing right now is that some of them entered the market not through an IPO, predominantly through a SPAC. So we, of course, also got a lot of money through these SPACs. We invested in the likes of, I'll give you the few first. Laser, which was GMHI, Velodyne LiDAR, which was GRAF, CGRO currently, yes, before it becomes CLA, which is Ouster, before it becomes Ouster, THBR, Indie Semiconductor, IPV, which is IVA, also a potential opportunity. Now, for us, we also invested in ChargePoint, aka SBE, before it rose to $30 to $40. TPGY, EV Box, NBAC. These are all charging stations for all the vehicles, electric vehicle revolution in the next 5 to 10 years. Indeed, we are seeing SPACs left and right, especially for the battery sector, because most of the batteries have not been listed, and they listed in the market through a SPAC. RMG is Romeo Power Battery. KCAC, which is Bill Gates backed SPAC, which is solid state battery, is now QuantumScape. This SPAC went from 10 to 120. Right now it's trading at about $50, but still, for the early investors, they've got a 12x move. Even if you're selling at $50, you still got a 4x, 5x move. Now, of course, Microvast, THCB, which is a Chinese battery company, also listing in the market. CBAT is also in the battery market. You could see that all of them have rallied. Almost all of them have rallied at least 50 to 200%, especially if you're early in the game. Now, STPK, which is a storage-related company, will be beating or fighting against CleanSpark and EOS. Whether they're fighting, the truth is they're not. The entire electric revolution is not fighting, but it's actually complementary to each other. They're actually displacing the fossil fuel world. Right enough, it is true that all of the lithium miners have also rallied, even if they were in SPACs. You've got Albemarle, and then some of them, which are like MP Materials, listed through a SPAC, also rose. You've got solar companies like Alac, which is going to be Solar Max. We've invested at about 10, 11. Today, Solar Max, I think, is at 13. Usually, as I said, they rally something in the realm of 25 to 250%, which actually should give you a clue on why people are dominating into a sector called sustainability-focused SPACs, ESG SPACs. If there was a theme in your SPAC had to be a clean tech SPAC. So of course, hydrogen fuel cells were rallying. Take note that F-Cell, which was a buy recommendation of Awesome10X at $2, is now trading at $20 3 months after. Plug Power 9 right now trading at $70. Bloom Energy, we got in at about 14, even as high as $20. Today trading $35. We entered Ballard quite early. This was not a SPAC. This was a Canadian company. We were studying it since last year. I mean, last year, which was 2019, when it engaged a deal with China with Great Wall Motors. So it is doing a lot of logs, and fuel cells are an alternative to your solar power. It is an alternative to your electric vehicles. Fuel cells can actually do more at a cheaper cost, especially let me repeat again. The reason why there is a SPAC mania in the ESG and a lot of clean tech SPACs has primarily been a function of really low interest rates and a function of a lot of these investments, whether it be Biden, whether it be Xi Jinping, whether it be Europe, the entire world, your Toyota, all of the corporations have pledged in the Paris Climate Change Pact that they're gonna spend everything that they can, something in the realm of $2 trillion for Biden, and something in the realm of $5 to $20 trillion for China in the next 10 years or so, until 2050, just to ensure that the world is clean and green, and we're gonna have Captain Planet in our minds every single day of the week and every single day of the year. PIPP, PIPP, somebody's asking in the chat room, it is a Biden beneficiary. It is a defense-related company, so it's not a clean tech company, as far as I know from what they have been saying in the business news wires. So as you could see, sorry guys, I'll stop my video to prevent all of these errors in our show, in our class. So I'll try to stop my video, but I will speak nonetheless. As you could see, Awesome10X believes that the best way to understand everything about SPACs is really to understand the sponsors behind them. We have been saying sponsors would actually tell you a lot about the company inside. If you can trust the management, you can trust what's going to be their criteria in that SPAC. So let me just give you a test right now. I know some of you are new, but I'll give you a test paper nonetheless. Who is this guy? This is Peter Thiel. Well, it's a test that I answer anyway. This is Peter Thiel, and this is, of course, Li Ka-shing's son. What's his name? Something like Peter Lee. So billionaire, Hong Kong billionaire. They both teamed up for SPACs like Bridgetown, BTWN. So with the kind of track record that we are talking about, these guys know how to make 10x and 100x, sometimes 1,000x. Awesome10X chose SPACs that are billionaires, celebrity, high caliber backed SPACs. These are guys with a Okay, I reconnected already. So sorry for that technical error, but really the best way to get your SPACs with a high probability chance of getting a 25 or even 100 to 200% is to find the credibility of the sponsors backing it up. So why amongst 200 SPACs will you actually not take a look from people like Masayoshi-san? So I'm going to give you some clues here. Wait, let me share my screen right now. Wait up. Let me present this. Wait up. Says here that I should share my screen. Wait up. Okay. Here. One page, but tells you everything that you need to know about succeeding in SPACs. You guys still there? Hello? Hi, can somebody answer me? Am I still here? Am I still talking to somebody?
Yes.
Okay, everyone's here. All right, got it. All right. So let me just go back to my slide. Everybody who's not into SPAC thinks that it is a bubble, except the people who are backing up. Hello? Yeah, so everybody, who's everybody? We're talking about guys like Peter Thiel. We're talking about Li Ka-shing's son. We're talking about SoftBank's Masayoshi son. We're talking about guys like Chamath, Bill Gates, Ann Wojcicki. This is Mr. Bill Foley, Reid Hoffman, Jay-Z. Even Michael Phelps and Demi Lovato has a SPAC called HEC. Of course, you've got Richard Branson, Kevin Systrom of Instagram founder, which is Ajax. You've got Bill Ackman. Everybody knows about Pershing Square. People like Harry Sloan, who of course successfully listed DraftKings and Fiat, aka Skills today. Of course, you've got Howard Marks also investing and SPACing his OAC, which is Andrew Dudum's Hims and Hers Healthcare. You've got Darren Davis, who has a SPAC called Bullhorn, likely to be the SPAC of Reebok, as rumors say. You've got Shaquille O'Neal partnering with Kevin Mayer, which is the prior CEO, the former CEO of TikTok. And also Kevin Mayer is the Disney high executive. So very strong management teams, guys. And that is one of the reasons why, to be honest, not to brag, but Awesome10X has not failed in any SPAC recommendation, in any Awesome10X Inner Circle recommendation. So we've actually got a high 99, actually it's not 100, it's not 99%, it was 100% hit ratio so far in the SPAC field. So let's see. Of course, we got listed B-Town. B-Town is Bridgetown. We got into Bridgetown, BTWN. That is rumored to be Tokopedia and Gojek. So largest e-commerce and largest ride-hailing in Indonesia would be inside Peter Thiel. And so we believe that this is a very good company, an IPO, a SPAC that we have in our portfolios. Peter Thiel believes that the true start of the 21st century has been the inflection point brought about by COVID, starting the SPAC boom, the surge in EV stocks. That is a sign. He says the SPAC boom of 2020 is Wall Street's story of the year, a once-in-a-lifetime chance for early stage tech companies, particularly in the advanced transportation space, to grab funds at a breathtaking pace. He listed shares this year, and actually he also backed up some of the best companies like LiDAR firms like Luminar Technologies. We got into GMHI, the Austin Russell SPAC. Austin Russell was backed by Volvo and Peter Thiel, made some money, and today still at $30. We continue to hold our lasers because it is an early stage company that will actually be the vision of all of the cars, especially the Volvo cars. Peter Thiel is also a very famous investor, the PayPal founder. He was not just that, he has been one of the most I'd say one of the most successful venture capitalists, making thousands and thousands of X. I'm talking about your $1,000 is at least $1 million. So that type of investments, whether early stage in Facebook, of course, many, many more, guys. So there seems to be a lot of pretty crazy fraud. People say that this is too expensive. High-profile SPAC mergers like Luminar, founded by optics prodigy Austin Russell, GMHI, right? Self-made billionaire. But Peter Thiel says this is the year in which the new economy is actually replacing the old economy. For robots, for autonomy, you need LiDAR, aka laser, light detection, and range. So with a lot of companies going autonomous vehicles, self-driving vehicles is our 10-year future. It remains to be unknown for me why people would not actually invest in LiDAR companies, because these are the next Googles of our world. The thing under the thing. If you're gonna buy a Tesla, yes, Tesla would be computer vision AI. They're not in the belief that LiDAR are the best technology. However, the anti-Teslas are actually all using LiDARs. We're talking about at least 300 million vehicles that will actually be using LiDARs, whether it be robotics, autonomous vehicles, hundreds of applications, even farming equipment, which will actually be autonomous in the next 5 to 10 years. Actually, it's not even next 5 to 10 years, because I've seen it happen. Raven Industries, John Deere, both Awesome10X picks as well, are using a lot of LiDAR. For those who aren't aware, DOT, the DOT, which is acquired by Raven Industries, is helping a lot of farmers get the most yield in a 5,000 hectares. It's not a farmer, it is DOT, which is a robot doing that farming for people to actually increase production. Because guys, in the next 10 years, actually in the next 30 years, our population will hit 10 billion people. We will need food. And in order to address food sustainability, food production in the next 30 years, we have 3 billion people. We need to feed 3 billion people at a cheap price. Our food production has to go strongly up. Farming land is too small. We really need to invest in companies like Indoor Farming, which we actually invested in, such as Novus Capital. I forgot to put in the picture Martha Stewart, but Martha Stewart is the sponsor of Novus Capital, and the CEO, the president of Novus CEO is Impossible Foods CFO. So that is how great that company is. NOVS, we got in at about 10, 11. Currently, it's now, I think, 25. So we weren't just doing a SPAC marriage. Of course, when you want to marry somebody, you need to know that somebody. And that is what Awesome10X does for you. That's why paying 15,800 pesos for an annual fee just to enter inside the inner circle is too cheap of a cost if you understand how much the money being made behind the scenes of Awesome10X. So we're talking about, I'd say, if our group was combined, at least 10 to $20 million was made within around 400 individuals. So that's around 100 to 400 individuals. So that's a lot of money, and you can actually be part of the group. Go and sign up, subscribe, Awesome10X Inner Circle. Of course, Reid Hoffman is a billionaire SPAC. We already invested in RTP, Reinvent Technology Partners, partnered with the Zynga, former Zynga chairman, which is Mark Pincus, a very strong team behind. You've got also Jay-Z doing a SPAC, Rock Nation, Kalaiva, and Left Coast Ventures. It's the Monogram. the high-end, the luxury weed. Now, of course, do I believe that Jay-Z can pull this off? Yes. If Jay-Z was able to make Yeezy, Adidas a strong winner, they could do the same thing. He's the chief visionary officer guiding the brand strategy of this cannabis business. They're investing in Black-owned and minority-owned cannabis businesses. So it's gonna be a part of the ESG funds. The S meaning social, you're gonna help a lot of Black minority. And I think this wins that ESG fund check mark, especially with legality of marijuana, legality of cannabis. So SVCF, we've got it at 10. I think right now it's trading at about 12.5. I think it listed, it hit 14 just recently. The transaction expected to close this January 2021. So there are more cannabis-related SPACs. Let me begin with a few of them. Merida is raising around $130 million, the IPO date, and I think they're going to close by November 7, 2021. So this is an important company to take a look at. Merida merger. Why am I taking a look at Merida? It's because Merida has invested early on with some of our cannabis growing companies like Grow Generation. If you believe in Awesome10X Picks, like GRWG, you would be surprised that GRWG was invested in by Merida merger early on. So with that kind of track record, Merida Capital, in my view, knows how to choose the best cannabis companies out there. And so I'll put some of my money with Merida Merger Corp. Now, this is another SPAC. Green Rose Acquisition Corp said that they're also interested to do cannabis. So I'm not yet aware, but we're going to read about Green Rose as well. Stable Road SRAC is a $170 million SPAC. It just recently closed with Momentous. So Momentous is actually a space SPAC. That is a SPAC play. For those asking me about these names, you can just search it in ticker tradingview.com so that you can know it. People are asking, how is Jay-Z related to Adidas and Yeezy? Okay, I am surprised that some of the people don't know, but the brains behind the sneaker culture is Jay-Z. So Adidas actually took Jay-Z a part of it. So they were, Jay-Z was actually the brains behind it. I think you can search Google, right, for that. All right, so in terms of marketing and social hype beast, I do think that Jay-Z knows how to pull everything off, from hip hop to sneakers and also to cannabis, luxury weed. We're talking about luxury weed. Now, Tuscan Holdings has already finalized with THCB actually was a battery company. That was Microvast. So that was the Chinese company. We also got into Silver Spike Acquisition, which is SSPK. That was finalized as Weedmaps. So that Weedmaps was actually, in my view, it connects to me. If you're gonna ask me a short sentence about what SSPK is, Weedmaps is the Shopify of weed. It's connecting, it's e-commerce for weed-related retailers and cannabis consumers. So Tuscan Holdings has two. It's Tuscan Holdings Corp and Tuscan Holdings 2. Typically, you'll notice that a very good SPAC sponsor like Bridgetown has their second version, which is BTN. So typically, when you're happy and made money already on the first, you're gonna be betting as well on the second and the third and so forth. And who better for us to say who did that? It has been Chamath making IPOE to Z, right? So in terms of Fintech SPAC IPOs in 2020, you have Catapult, which was FSRV. They announced it. We also got in on FSRV. We also got in on BFT, which is Paysafe. In my view, these two SPACs are very good amongst the number of SPACs that are out there, right? So Churchill Capital also got into Multiplan. I didn't get in here, but I do believe that because it has been very successful, it is a fintech healthcare play. that people actually have so much trust with Churchill Capital. And actually the CCIV is the Churchill Capital 4 is actually the one that people are interested in, which is Lucid Motors. Sometimes right now, I'd say that people are so happy with the sponsors that they're willing to buy Churchill Capital 5, even if they don't know what it is, Churchill Capital 6, the way that they're buying things from Chamath, wherein IPOE, which was Virgin Galactic Space, IPOB, which was Open Door, IPOC, Clover Health, IPOD, I didn't know, IPOE was, IPOE is something that I'm interested with, which is SoFi, Social Finance. IPOF, I still don't know. So typically, the other people look at what's behind it or who's behind it. So it really depends. I personally try to look at the company first rather than the people behind. But sometimes I also do that. The people behind is not a good thing. That's why I entered JHIV, which is Gores Holdings 4. This is gonna be United Insurance, wholesale mortgage. So it's gonna be a bigger company. It's a fintech SPAC, so bigger than perhaps your Geico, which is Warren Buffett's SPAC, bigger than your Rocket Loans. It's actually it's a competition of RKT, Quicken Loans. So UWM. So among the fintech SPACs, the Awesome10X believes in Fiserv. I'll give you the name: Catapult, Paysafe. I believe in United Wholesale Mortgage. I didn't study the rest. So I have those three. When I say I believe in them, I do have them. So of course, there are big companies. The crypto SPACs are also coming into town. You know about Coinbase IPO, but you also are aware that the crypto exchange back just signed up a SPAC with Victory Park. That is VIH. So Bitcoin SPACs giving a flavor to 2021. So there are, I said, a lot of cannabis-related SPACs. Green Rose would have a ticker symbol GRACU. It's currently Green Rose Acquisition. Just type it in. So I think it's GRSA. Ceres Acquisition is expected to target consumer-facing cannabis companies involved in retail brand building, consumer packaged goods. So I think it's going to be a competition of Green Thumb Industries. Me personally, I have a lot of cannabis recommendations. We invested in Grow Generation, Green Thumb Industries, True Leaf. We have some Tilray, we have some Hexo, we have some Afria, we have some SSPK, aka Silver Spike, which is Weedmaps. We've got Subversive Capital, which is Jay-Z SPAC, Organigram Holdings, yes, amongst many. Chronos as well. CGC and Charlotte's Web a little bit, Charlotte's Web and Canopy Growth as well. So there, we are fully covering almost all these cannabis-related SPACs and at a price. Of course, not any price, but at a price. Akerna is going to be the first SPAC that is cannabis-focused. It is a Denver cannabis tech company. Akerna is saying that they're purchasing Ample Organics. This is a top seed-to-sale Canadian business, and are going to form a large strategic relationship with leading operators and brands. Mercer Brand, which is a sponsor of another SPAC, also known as Ayer Strategies, is the leading cultivator, manufacturer, and retail of cannabis products and branded cannabis packaged goods. So you've got a vertically integrated multi-state operator in the US with portfolio facets based on Massachusetts and NV. Not sure what NV is, guys. Last year, Ayer already partnered and acquired 5 operators: Washoe Wellness, The Canopy NV, Siren Naturals, Live Free Wellness, Canna Punch. Okay, so NV is Nevada. So Nevada, Texas, yeah. Schultz is another cannabis company. Schultz Special Purpose Acquisition Corp. has a non-binding letter of agreement, letter of intention with Clever Leaves. This is a multinational cannabis operator. They already are vertically integrated. Facilities internationally in Colombia, Portugal, United States, Canada, and Germany. Those who are listening are actually encouraged to have a notebook to write this, or even just stop and take a snapshot of all these classes, companies that we're talking about. So yes, the Bridgetown 2 Holdings, which is Thiel Capital and Lee Pacific Century. So we're talking about Richard Lee. They're going into their second SPAC. It's going to be BTN after closing a super good deal with the first deal. The rumors is that this is going to be Traveloka. So Traveloka is similar to, I think, I haven't studied what Traveloka does, but in my view, I think Traveloka is similar or helpful to people traveling. So I guess it's a little bit more like it's not an Airbnb, but you can search about it. Of course, there are so many telehealth SPACs as well. Gig Capital is Gig Capital 2. This is the second already, GIX. They have formed an intention with to be Cloudbreak Health and UpHealth. They want to merge with these two companies because currently they believe in the bigger secular trend, which is telehealth medicine. In a world with a lot of dizzying number of healthcare markets, it's hard to see how you could actually beat the entrenched people out there. This is company that is currently making $115 million in revenue, but they believe that they're already positive in the earnings and their revenue will triple. For the telehealth, actually, there are IPOs very successful. Of course, a lot of people know about Teladoc, TDOC. Teladoc listed in the market in an IPO about 5 years ago. It went from $40, $36 to as low as $10. And today it's trading at about $240. You got that right. Your $10,000 is $240,000 in 5 years' time. 24x if you invested at the early part of $10. Now, let's say you bought at about $40. You still made 6x your money. Your $40,000 is $240,000, and Teladoc is still the largest, especially after acquiring Livongo, which is the largest in terms of diabetes health management, such that Livongo even is a partner of Amazon. Now, in terms of Teladoc, there was a competition. The second competition was Amwell, which listed in the market through an IPO. Awesome10X believed in Amwell. We believe that today's price of 25 and 20 is actually a value for the people who believe in telehealth plays, given that Amwell is number 2. Number 1 is Teladoc. And you've got a huge secular trend. We're talking about telehealth visits, not just hitting 10x. From 11,000 visitations prior to COVID to about 650,000 telehealth visits. So I believe that the trend is there. The telehealth has always been displacing offline visits to doctors, but only during COVID pandemic did it become really if Zoom video had a debutante, it had a very good debut in 2019, and really in 2020 emerged from a buzzword to every household, like everyone knows, let's just Zoom, right? Let's just Zoom video. In the same case, like a verb stock, Teladoc had become that. Telehealth had become a verb. The industry is a verb. So I do believe that the SPACs that are entering the telehealth SPACs are also getting a lot of love. GIX is one of them. So SPACs 2021, and just as I said, we're gonna close it under an hour. These are the SPACs that, in my view, passed the test. Alac, which is Solar Max. ACTCU just described that they are going to be listed with Proterra, the Tesla of buses. Ajax, which is listed, it hasn't described what it's going to be, but with Ann Wachicki and with Kevin Systrom behind, I'm willing to bet that it's going to be a very good company behind it. Instagram and 23andMe behind them, count me in. Avan, the rumor is that it's going to be Klarna, which is a fintech play that's so huge that is a firm of Sweden and Europe. If that were true, I believe that Avan is really going to be a blockbuster company. GISA and BTAC is going to be, GISA is known for its Goldman Sachs alumni. We're talking about the biggest head of venture capital investing in technology behind it. So the ones who listed your Spotify's and every big company that you know today. Those investment bankers have a SPAC. It's called GSAH. So whether it's true, there is a rumor that GSA and BTAC, either of them is going to be an Etoro SPAC. Now, for those people who don't know who Etoro is as big as Robinhood. Robinhood is probably going to go IPO, but the pseudo Robinhood is going to be Etoro, which is socializing investing, like a Facebook type, a very easy way to invest. I admit I have not, I just recently opened my Etoro. So because I saw that it was 8% margin versus 1.59% in IBKR. However, I'm willing to take a shot because Etoro is too friendly. Indeed, when I opened my account, it was easy, user-friendly, depositing was easy. The only limitation right now of Etoro is that it doesn't have the SPACs. It doesn't have the SPACs and it lacks a lot of small caps and penny stocks, which I actually invest in because I really dig underneath. Like I look for 10X companies. When I say awesome 10X, it means that let's try to double or triple or 10X your money. Your 1,000 is $10,000, not in a year, but in a decade. And true enough, I think that the Awesome 10X is proving that we can. So within 2 years or 3 years, sometimes 5 years, maybe a 10X in 10 years. So that is the way that we identify and look for companies, the companies that are likely to 10X in a decade. Now, IMPX and Avan are being told either it's going to be ESG focused, but Avan had a rumor of being Klarna. Whether it's going to be fintech or whether it's going to be ESG, I'm okay with that. Avan and IMPX, because IMPX is AEA Bridges Impact. When you take a look behind the prospectus, the sponsors are great, and you've got a lot of people behind that really wants to do a target, an ESG target behind. So it's going to be a clean energy company. I just don't know what exactly it would be. FRX is Forest Road. The reason why I'm taking a look at Forest Road and I invested in it, sorry, I didn't take a look, I invested in it. Forest Road is Shaquille O'Neal and Kevin Mayer. It's going to be a media-related SPAC, and most likely, in my view, it's going to be very friendly for sports. So with a lot of companies, really, because of the COVID, you know, about movie theaters shutting down, a lot of artists, you know, they have no jobs. I believe that the SPACs would actually try to target high-quality companies that just, you know, temporarily injured because of COVID pandemic. And so I think that the team behind, which is Kevin Mayer, the former TikTok CEO, you've got a great team behind Forest Road, and I'm a yes there. HTPA is Highland Transcend Partners, great company behind. So I'm investing in the company behind that they're going to find great companies for them. SSPK, I already know that. So I invested in Weedmaps. SVCF is going to be Jay-Z SPAC. SVFAO is SoftBank SPAC. It's going to be AI. So I'm a yes there. FServe, we already know it's Catapult. Roche, I already know it's Pure Cycle. I like them. CLA is going to be Ouster. I like that. THCB is Microvast. IPV is eevee. I like them. BFT is going to be Paysafe. NGA is Lion Electric. It has a lot of partnerships with Amazon. So that's what's really moving it so strongly. TPGY is eevee Box. I like that. It's ChargePoint of Europe. It's larger than ChargePoint actually. Kel is going to be, you know, there was a rumor before that Kel was going to be Proterra. It just happened to be ACTC. But Kel, I think, would still be an ESG-focused SPAC. So even if it's not a Kel, it's likely going to be another electric vehicle. Thunderbridge is going to be Indie Semiconductor, which is going to be helping all of your electric vehicles revolution. VCU is 10X Capital Partners. They have successfully invested in so many 10X investments. The name itself tells you that they are looking only for 10X investments. And I like people, and I like to back up people with track records, people who invested in Robinhood and Coinbase and Spotify before they were there. BHSC is Bullhorn. This is Baron Davis SPAC. The rumor is gonna be Reebok. So I know that you might say, well, I want Nike and I already want Adidas and they're already listed. Why would I invest in Reebok? Most likely because it's gonna be $1 billion, whereas your Nike is $100 billion and more already. FMAC is gonna be First Mark, so very good, strong capitalists. So very strong investors behind them. So I took a look on the website. Very good track record. FST is reputable. You've got this is going to be a restaurant related SPAC. The rumor is that it's going to be Five Guys, but I'm not sure if it's really going to be the Five Guys burger. However, whether it's going to be the burger chain or not, I'm willing to take a stake because the people behind are people who worked in, who really developed Chipotle, CMG. The people behind are so credible that I think FST is an undervalued SPAC. I got in at about 10.2. SVAC is a Starboard Value Acquisition, great company as well. So most of these, actually, the logic that I invested in most of them is because I took a look at the quality behind them. So SVAC, Starboard Value, Sustainable Opportunities Acquisition, Reinvent, B-Town, BTN, Dragoneer Investments. Dragoneer Investments, I would pay just to be a part of Dragoneer Investments. So I'm game there. DGNR and DGNS. Switchback is SBE. They've got the second, which is SWBK. These are all second versions. FCAC is the second version of FEAC. Also, Flying Eagle also has Spinning Eagle, SPNGU. Lego US Legato merger, in my view, very strong investments as well in sustainability. So I think it's going to be clean energy. I think it's going to be an LNG focused company. So the Goris Metropolis Group, you've got GHIV, the GIK, Rises Sustainability, NPA, SRAC are both space related SPACs. And I like them. VIH is a crypto SPAC. PIPP is a Biden beneficiary SPAC. And so I hope that's it. I really timed it. And so we've got all the SPACs under an hour. Everything you need to know about SPACs in under an hour. These are some of the charts, just a quick look. Green Rose acquisition. Usually I also buy the warrants. Green Rose acquisition warrant is $1. If I'm right that the SPAC that the marriage partner is good, it's going to be at least $5 to $7, $8. So Green Rose acquisition, if you want the stock, is GNRS. If you want the warrants, it's GNRSW. So the warrant of Bullhorn is BHSEW. Some of us got in at 70 cents. When they released the Reebok announcement, it was $1.70. So it's rallied already, but I think the $1 area is actually attractive for those who don't have Bullhorn. At $10.20, of course, these were January 8th. Some of them we got in a week ago. ACEV, I forgot to put it in. ASEV, I haven't studied this, but I think this is a semiconductor-related SPAC. BPC, this is going to be the crypto SPAC of BACT. So the crypto exchange platform, it's going to be a brokerage firm of cryptocurrencies. So VHA, it's $1 right now, VHA. So if you're interested in the warrants, I think $1 related SPAC warrants are good entry opportunities. Thunderbridge, Indie Semiconductor, CLA, Ouster, made a deep dive on this. All right, so thank you very much, everyone. People are asking, how much do warrants eat up on the margin requirement? It depends. Sometimes it's about 30%. So either way, I think that in general, whether you enter SPACs through warrants or through the entire stock, please note that warrants is just an option to buy the stock. Usually at the strike price, they'll tell you $11.50. That is the usual warrant. And usually the warrants allow you to buy the stocks, usually 3 shares of that stock at $11.50 within the next 5 to 7 years. So example, if you are long-term in CLA, AKA Ouster, LiDAR, right? So there is a CLA warrant. The CLA warrant is right now trading at $3.60. So each warrant is different. You can check out, you can look at the prospectus, do a Google search. You'll find out what is the strike price, how long the warrant will last, and how many shares can you actually buy. Can you buy 3 shares? Can you buy 1?